Bitcoin is sitting around $90,000, and the macro landscape is shifting fast. Governments around the world are easing off quantitative tightening, and some are already moving back toward full-on quantitative easing. That means more liquidity, more money flowing into markets, and historically that's the exact environment where Bitcoin performs at its best. When central banks ease policy, investors start taking on more risk, and Bitcoin is usually one of the first assets to benefit. Liquidity fuels upside, and the market is already showing early signs of that rotation. In the short term, over the next 6 to 12 months, Bitcoin has a real shot at pushing into the 110,000 to 130,000 range. If global liquidity expands faster, or if institutional inflows ramp up again, that window could widen toward 140 to 160,000. At the same time, consolidation between 90,000 and 100,000 is still possible if the market needs to reset. Longer term, over the next 1 to 3 years, Bitcoin's outlook gets even stronger if macro conditions stay supportive. With more liquidity, more adoption, and continued institutional demand, Bitcoin could normalize in the 150 to 200,000 range. In a full bull scenario, especially if global uncertainty rises or if Bitcoin strengthens its role as digital gold, upside beyond 200,000 becomes realistic. The biggest risks remain inflation, sudden policy reversals, and regulatory surprises. But overall, the macro backdrop looks more bullish than bearish. Liquidity cycles tend to drive Bitcoin, and right now the cycle is shifting in Bitcoin's favor. If you're long-term like me, this is still a time to watch the macro closely, accumulate on dips, and stay focused on the bigger picture. CT Honey Badger out.